Finally, buy AMD and Nvidia now and don't stop buying.
Felix here, and wow, semiconductor stocks just experienced their biggest rally in months as Trump signals breaks for key industries. AMD is up nearly 7%, Nvidia is pushing higher. Could this be the perfect catalyst semiconductor investors have been waiting for? Right, so listen carefully, because what I'm about to share could potentially save you thousands in lost opportunities. In the next few minutes, I'll break down exactly how Trump's evolving tariff stance is creating a unique window for semiconductor investments, particularly AMD and Nvidia, and why most retail investors are completely misreading the situation. But for those of you short on time, here is the essence. Trump's is pivoting to a more strategic approach with his tariff policy, targeting approximately 15% of trading partners rather than implementing this blanket approach that's been spooking markets. And the shift has enormous implications for the chip supply chain and could create exceptional opportunities in specific stocks if you position yourself correctly. Now, I've spent years analyzing semiconductor companies before anybody thought they were particularly sexy. I was tracking AMD when it was trading below $10. And what I'm seeing now reminds me exactly of patterns I witnessed before previous breakouts. But, big but, my conclusion won't be what you think. So listen carefully, don't act on the title, don't judge a book by its cover. What I learned as a banker is that there are patterns to the market that have nothing to do with the latest news. They help me make rules-based buy and sell decisions that actually work. It saved me a fortune in this sell-off just now, and it's how I got out of YOLOing into random stocks I didn't really understand, and instead I now use all the knowledge of every investor out there. You can tap into that. It's how I got to retire in my early 40s.
I gotta tell you, I know he's about to promote his masterclass, but Felix actually gets it. And it's really, really rare. It feels like just he and I, and maybe every once in a while we find someone else that really understands how the market works. Because buying dips is a very risky strategy. Jumping into something that's falling, you don't know how far it's going to fall. But if you apply the Outlier Trend Template, the 10 over the 20, price over the 50, that'll tell you when the dip has stopped and now the dip is going the other direction, right? And you're not going to catch the bottom. So please stop trying to do that. You're not going to catch the top. Please stop trying to do that, right? They say that the most expensive parts of a trade are the top 10% and the bottom 10%, because everybody's trying to find where that bottom is. Everybody's trying to find where that top is. But the easiest part of a trend is the 80% in the middle, right? Stop trying to find the top, stop trying to find the bottom, and just look to trade the 80% in the middle. And the market will tell you when those trends are starting to bend. The market tells you, right? I like to use the red light, green light analogy, right? So here's an example on AT&T. You had your 10, 20, 50 cross up, and you could have got in here on a close above the 10. You could have even got in here. Doesn't matter, right? But let's just say, for posterity's sake, that you got in over here. Had this huge gap and go. And then it had a close under the 10 EMA. Now, to me, that's a red light. To me, that says, hey, you know what? Something has changed in the market. And what's happened since then? It's basically gone sideways for a month. Let's use another example. Palantir. Another example. Your 10, 20, 50 crossed up. You could have used the green light right here. Right? This is irrespective of outlier data. This is just trend trading. Your 10, 20, 50 crossed back up. Then you had to close over the 10 EMA. Huge move up. And then let's say that you weren't able to get out on this day, but you did get out here at the red light. How much would that have been? Here to here. Only 42%. Only 42%. And look what happened after that. A giant move down. Now, I will tell you, there are times where you might make a buck or lose a buck, right? If we go over here, we see a couple crossovers here and there. You might make a buck or lose a buck. And AMD is a great example, since you talked about that, right? Irrespective of this order block right here, you could have got in and then got right back out. Could have got in, got right back out. You might make a buck, you might lose a buck. It's part of the game, and you got to be okay with that. You have to be okay with taking losses. Have to be okay with taking losses. That's not what I was looking for. Hang on. I don't have my PowerPoints up. Trading rules. Let me go to the slide I'm looking for. This one. There's no shame in taking a loss. The problem is when people hold on to a loss and let it get bigger and bigger, or even worse, buy more. That's amateurish and self-destructive. You don't have to do that. You don't have to do that. And that's what I like about Felix, is that he actually understands trend trading. He understands how the market works. And he's not out here saying, buy the dip. Or if he is, he's using it as clickbait titles, of course. But the point that I'm trying to get across here is that when you have a rules-based system, there's no MoFOMO. No MoFOMO. Because by having rules, if it doesn't fit your rules, you just pass. It's like it doesn't even matter, right? It's equivalent to like being at the library and you're walking through the shelves. You're like, which book am I going to pick, right? Or maybe even going on Netflix, right? You probably don't go to the library these days anymore, right? You're on Netflix and you're scrolling and you're scrolling. You're like, no, this doesn't fit what I like, and this doesn't fit what I like. You know, I like to watch documentaries about Barbie dolls. Maybe that is what you like, right? And you're going through and you're like, this isn't about Barbie dolls. This isn't about Barbie dolls. This isn't about Barbie dolls. And you're not looking at, you know, Gorilla King 7, or you're not looking at Home Alone 4, and you're not looking at The Return of the King, and you're not looking at The Lion King 1.5. You're focusing on, where's my Barbie documentaries? And you finally get to the Barbie documentary, you're like, this is what I want. Boom. Have that same approach to weeding out trades, and there's no MoFOMO. Nothing in those movies matters. They could be the greatest cinematic masterpiece of all time. I am sure that Lion King 1.5 ranks right up there with the greatest pictures ever made. But I'll never know because it doesn't fit into my Barbie documentaries. Have that same approach when you're looking for trades. If it doesn't fit my plan, I don't care. I'm not going to watch it.
And I want you to be able to do the same. I want to give you that rule book, but you need to promise me one thing first. Not only that you'll apply it, but that you will share it with at least one person. If you're going to do that, write share in the comments down below, and then simply head over to...
I did have some people say I should review Felix's masterclass. That wouldn't be a crazy idea.
I promise that knows is better than any fund manager I've met yet. So what's happening and why does this matter for AMD and Nvidia specifically? Now, you're going to want to grab a pen because I'll be sharing some specific price levels with you that you should be watching very, very carefully, and you need to write those down. So let's jump straight into what's happening with Trump here first. Following a cabinet meeting on Monday, Trump made some rather interesting comments that sent markets soaring. He stated that tariffs on various products will be announced in the very near future. But then later that same afternoon, he pivoted by saying, I may give a lot of countries breaks, and even added, we might be even nicer than that. Now, this is a big shift, a bigly shift even from his previous rhetoric. And what we're looking at is significantly reduced initial wave of tariffs expected on April 2nd. Very different from what analysts were expecting just a few days back. And the approach now appears to be focusing on what some in Washington are calling the dirty 15, essentially targeting about 15% of trading partners deemed to have unfair practices, rather than the sweeping approach that the markets were on the edge about. So what's particularly noteworthy is Trump's emphasis on the word flexibility, a term that was conspicuously absent from his earlier no carve-out positions. And we're also seeing ongoing negotiations with the European Union apparatchiks, Mexico and Canada, which have led to delays in announcing retaliatory tariffs. It's a difficult word, isn't it? Retaliatory. Say that 5 times with me. Now, write this down. The market's reaction has been undeniably positive. Major indices have jumped significantly, and semiconductor stocks in particular saw some remarkable gains. AMD surged nearly 7% in that single session, which is extraordinary for a stock that size. Now, what does all of this mean specifically for chip stocks like AMD and Nvidia? Well, I've identified five key benefits that emerge from the softening stance here. First, we're looking at reduced global supply chain disruption.
When he's not promoting his masterclass, like when he's actually delivering stuff, I don't mind Felix. I don't mind Felix at all. I think he's pretty good.
You see, semiconductor manufacturing is perhaps one of the most globally integrated industries on the planet. A single chip might cross international borders 5 or 6 times during production. Sweeping tariffs could have been, well, pretty devastating to that ecosystem. And then second, this points to lower production costs, which helps maintain those all-important profit margins of our Microsofts and Facebooks and Amazons and so on, plus, of course, NVIDIA. Now, when I was analyzing chip stocks, when I was in banking, we'd often see like a 1 to 2% change in gross margin translate into a 10 to 15% change in stock prices over time. So these margins really do matter a great deal. And then number 3, the third benefit is improved international business relations. So semiconductors are strategic assets right now. Having smoother trade relations makes it easier for companies like AMD and Nvidia to navigate all these complex partnerships with manufacturers in places like Taiwan and South Korea, for example. And then fourth, we're likely to see stronger consumer electronics demand. Lower tariffs on finished goods mean more affordable smartphones, laptops, gaming consoles, which directly drive chip demand. Slightly different chips, but still chips. And then finally, fifth, semiconductors likely won't be the primary target of whatever tariffs do materialize. Trump's comments suggest a focus on sectors like steel, pharmaceuticals, and aluminium. While he did mention microchips, the strategic importance of semiconductor tech to national security makes it unlikely they'll face the harshest measures.
What is aluminium? This is America. Never even heard of aluminium before. Daggum aluminum is what we have around here, I tell you what.
The US, quite frankly, needs them to lead the AI race. Now, of course, there's still some uncertainties here. Trump did state that tariffs would be announced in the very near future, and his policies have been known to shift, well, somewhat rapidly, faster than, Winston getting distracted by a snack on the left. And it creates a challenging environment for corporate planning, but the trajectory is more positive compared to what we were thinking about a few weeks ago. So pay attention to this point. This potential softening creates an opportunity for semiconductor investors who are positioned correctly right now. The companies with the strongest global diversification and most advanced tech are positioned to navigate this environment most successfully. Now you have the background. Does that start to make some sense for your portfolio situation? Let me know in the comments. And then we're going to look at the specifics of which stocks should we be buying here and at what level. So let's start with AMD. Is this one of the most fascinating underdog stories in the industry? Well, let's come to a conclusion on that in a moment. And look, AMD's been absolutely beaten up for months now, sitting about 30% below its 52-week high, despite delivering pretty solid quarterly results. But here's where opportunity often hides, right? Or does it? Well, let's dive into what's actually happening with AMD first, because it's quite remarkable. Then we look at the chart and we look at whether we want to buy this or not. So first, they're mounting a serious challenge to NVIDIA in the AI space. They got this upcoming MI355X series chip.
Okay. This is where my itty bitty baby brain, I like to put that out there because I'm just like you. I'm not saying you have an itty bitty baby brain, but I don't care about this stuff. I really don't care. I don't care about this in the least, right? You can tell me how great their chips are. But this is the same thing that Jeremy and other channels do, is they want to come and they want to say how great the company is, right? And I talk about this all the time. All stocks are bad, but every once in a while they act right. This stock is a bad stock, right? Yes, it did have this crossover here, right up into that order block. So you can check the receipts. I said, watch for that order block. In fact, I believe I said that it was making out with that order block. And then what happened? It got monkey hammered right back off of it. Hang on, I got to do it. All right, there was our monkey hammer for the day. It got monkey hammered right back off of it. So that's one I would have avoided, hands down, no matter what. But this should tell you that even if they have the greatest chips in the world, even if they have the greatest business in the world, the market don't care, right? The market's looking at this and it's like, you may have some fantastic chips, but we don't want them. We don't want them. And so that's an interesting dichotomy, right? Because, and I'm not saying Felix is saying this is the greatest chips in the world, but imagine that they do something absolutely revolutionary. And unless the market loves what they're doing, the market's just going to pound it. It's going to take it to Pound Town, or what is it, Poundland? we were in Inverness, Scotland last year, and I remember walking around the shops, and there was one store called Poundland, like a dollar store, and I just thought it was so funny. As you could imagine, an American over there would be like, Poundland, and then I called it Pound Town, and my kids thought it was super funny. But anyway, I mean, these moves right here tell you that the market doesn't care, right? And then I've also heard YouTube analysts come out and say, the CEO is so great. Everything they're doing is awesome. If everything they're doing is awesome, why isn't that reflected in the stock price? I don't know. But let's skip forward a little bit, because I want to get to the point where he's talking about. I want to see his levels on the charts, and I want to see, because like the story doesn't matter to me. The story doesn't matter to me, because at the end of the day, only price pays. Pound stretcher. That's a good one. Okay. Hang on. Give me something here. Where's he talking about? levels on the charts. That's what I care about. Come on, Felix. Where is that? I'm 15, 16, 17. There we go. Finally, I see a chart pull up. All right. Let's go over to that.
Exceptional returns from those who merely buy the index. Now, with those fundamentals in mind, let's look at the current charts for AMD and Nvidia, and I also want to show you the secret trades that Wall Streets are doing. So we're going to kick it off here with AMD, and
finally, this was at minute 17 and 48 seconds.
I know I was giving you a warning on AMD, but let's have a look at what the stock charts say. So the stock's obviously sold off tremendously from its peak here. Let me get the peak into view. So we're down at the moment about 49%, right?
Well, that's a cool tool, like a ruler. And it tells you, I like that. That's a neat tool. Never seen that before.
Didn't I not say 35% earlier? I guess in the last year. Yeah, okay. That was slightly more than a year ago. 261 bars is about 40 extra trading days in a year. So is this that we're seeing down here now, is that the breakout of all breakouts? Is that the moment where we all go, oh my God, buy it, buy it, buy it, as some people are screaming on social media? Well, what are the positives? Well, we have a nice rally up, right? That yellow line there is the 50-day moving average line. And that's positive. We're above it, right?
So I will absolutely give him a lot of grace here because he can't see the future. Right? We Felix and I, neither one of us have the Nancy Pelosi plan yet, where we can see out in this white space over here. We can't see the future just yet. I mean, the Nancy Pelosi plan is $84 million a year. So unfortunately, that's out of most people's price range, including me, unfortunately. But I'll give him a little bit of grace because he couldn't have seen this big move down afterward, right? Now, had he seen order blocks on here, he would have known now's not the time to be doing it. I did see a question. How much does an order block last? Para, I got you. So when an order block is there, it will remain there, kind of like the one below it, until it closes on the opposite end, right? So imagine it goes over here and closes there, then the order block disappears. Super cool. And these will be coming inside of Outlier very, very soon. We are working on it daily. So these order blocks back from March of 2023 and May of 2023 and October of 2023, they will stay until we get a close on the opposite side of them, right? A close like down here. That's a bit big, or a close down here, and then they disappear. But in Outlier, because we had this discussion about how order blocks are great, but it's really annoying when they disappear and you don't know if it ever had an order block there. Like, for example, it could have had an order block at the bottom of this, at the bottom of this, the bottom of this, the bottom of this. Right? We don't know anymore because they're gone. So in Outlier, when we make this change and implement these, you'll actually see the termination point, right? It'll look something like, I'll show you what it looks something like. And I think this is going to be a lot more useful. It'll look something like this. That's not the one I want. Hang on. Something like this, right? Where you'll see the termination point of it. And so I think that'll be really useful where the termination point hits. But to that point, that's, I'll give him a little bit of grace because I do want to hear what he has to say, because the 10 over 20 price over 50 was here. And like I tell you guys, you might lose a buck, you might make a buck. But if you're on the right side of the trend, when the trend changes, you can make a ton.
Right, so we're above it now. That's kind of good. But have a look at our analysis, because we actually give you live analysis in Trade Vision, which is what the software is that I'm looking at here, which is a software that we build. I never shill other people's stuff because I want to make sure it's actually brilliant and super, super high value for you. And it gives us here some technical indicator alert. It says a death cross appeared on March 20th with the 50-day moving average crossing below the 200-day moving average, sparking concerns about possible downward pressure. So let's have a look at that. We click down here on the moving average lines, and we select the 200 and zoom out a little bit, and we're like, oh, yes, that wasn't good. That was
For sure. When was that? Looks like August of 2024. So let's put a line in right there. August 24th, I think it was. Something around there. Yeah, for sure. Now, keep in mind, you can always use red light, green light. You don't need any extra software. You don't need Outlier. You don't need anything else. Red light, green light. A close under the 10, like this right here, that's a red light. A close over the 10 with the moving averages in your favor. So let's say 10 over 20, price over 50. Right here, that would be a green light. Okay. And the reason that I want to showcase this, and the reason I want to continue pointing this out, is that it doesn't need any specific software. just your eyeballs to look at this 3 moving averages and say, okay, so the Outlier Trend Template bullish. It was right here. It certainly was right here. So you could have red light. Yeah, unfortunately, that would have been a bad one right there. But that's a great example of how you could make a buck or lose a buck, right? This, how much would you have lost? Not much. Like $5, okay? Then you come over here and you red light, green light right here. And red light under there, right there. Would have made $11. So just on these 2 trades, you're up money. All right, that's why I say it's okay with taking a loss. Be okay with that. But I really do try to make my free videos better than most people's paid courses or masterclasses. Just putting that out there. So let's continue on, see what he has to say.
Wasn't good, right? That was pretty bad. What about, yeah, we're below all the moving average lines. So this is definitely not pretty. So that was a while back, and that was a pretty good sell-off signal, right? So what is that saying to us? Well, there are a few problems with the rally thesis. One is that we've had plenty of these attempts in the past. Right? We did this one here, we did that one here, we did this one here, you know, smaller ones along the way, and then this one here, which now doesn't look particularly exciting compared to the ones that we're seeing over here, right, which all failed. Secondly, and let me zoom in a little bit for you here. Do you see volume bars down here? In a real rally, what happens? Volume spikes. Has it done that? No, let me show you a real rally. Let's go back a little bit in time here, and I'll show you a real rally. And yeah, here, for example, here you had one where we were coming down, right? Bit of a failed attempt of a breakout, come back down, and then again here, and then this here was the real breakout, and look at the volume. Volume was flat, and then volume exploded, right? That's kind of what you want to see. What does it mean when volume explodes? It means institutions are buying. Right now, they're not buying. And if you don't believe me on that score, there are 2 other indicators I can show you. One is the stock oversold?
Well, I am not a huge watcher of volume. And here's a great example, right? Here's a great example. Let's go to that on the chart. This candle is this. Right? This high volume bar right here translated that when it was around 110. And then it still sold off down to 96. So even though volume spiked, even though it did have a few green days, I was trying to think of a Green Day reference that I could throw into that, right? God, I can't think of any Green Day songs at the moment. Anyway, the Boulevard of Broken Dreams. There we go. There's your Green Day reference. That was a good one. The Boulevard of Broken Dreams came through. And even though it had a high spike in volume, it didn't really change anything. It was dookie. Perfect. That was perfect, JG. Thank you. Yeah, wake me up when September ends on here. Can still be dookie. Exactly, Sarah. Yeah, you guys, exactly. I don't know sweater, but I'll take it. Yeah, so for sure. Even though it has a big volume bar, it doesn't necessarily translate to the price moving.
So I've got RSI open down here, which says, is it oversold? Now, it was oversold down here at 30, and that was sort of the bottom. But it also did that here, right? And that was that bottom, and then we got a little rally up, and then we came back down. This time, we got a more significant rally up, but we're now at 60-something around our RSIs. If I look at last times we were at these sort of levels, well, what actually happened? These were actually tops. These were not continued rallies. So that's not looking particularly wonderful. And then I told you I'd show you what Wall Street's actually doing, the big guys. Well, we have a feature in here, which you can see here on the right, and it's called dark pool. And then you can see the private big trades of Wall Street, the big hedge funds, the big investors, the big investment banks, and they do that in dark pools, which is basically a private stock exchange. Doesn't show up on our data live, and we've got access to that. How do we have access to that? Well, we pay about, well, a small fortune for access to this data. Like when I was in banking, I think we've spent probably 5, maybe 6 figures a year on my data, probably 100K plus. So that obviously isn't available to you, to most people. So what we do is we spend that money now, and then we take that and we divide it by the sort of 10,000 people or so who use TradeVision, and therefore it makes it just about valuable once we paid our development team. So what do you see in the last couple of hours here, or the last day here? Just look at the sentiment: bearish, 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 bearish. There's one ball, but bearish, bearish, bearish. There's another ball. So it's 90% bearish, the sentiment, right? So institutions ain't buying AMD. So therefore, should you? Well, leave that up to you. Let's have a look at NVIDIA then, and I'll tell you what I think about that one. So what are you seeing here? Well, the last time we got really excited about NVIDIA was a pretty long time ago. It was in May last year. We got a breakout here at around $100. Okay, and then we continue to rally up to about $140, and the exit.
And let's go look at NVIDIA as well. So he's talking May of 24. Remove all annotations. Yeah, legit. So, right, you can still apply the Outlier Trend Template, right? Couple order blocks right here, but let's just ignore those. All right, so where did it cross up? Where did it close up? There's your green light right there. This one candle is your green light. That one candle. There's your red light. Go ahead, in the chat, tell me how wrong I am about red light, green light. Go ahead, tell me. Because what happened after this one candle closed under the 10? Sideways, down. Did you have to participate in sideways or down? No. So we saw, oh my green light went away. We saw a 42% gain right there. Now, geez, it's still, I mean, it went sideways from this point to this point. Literally 3 months. Literally 3 months of dead money. And you didn't have to do any of it. You didn't have to do any dead money. 3 months of dead money. Just by following red light, green light. Pretty cool, right? Now, of course, there were a couple times in betwixt that you could have got in, right? So let's say you did a green light 10, 20, 50. Let's say you did a green light right there. And then you had a red light right under the 10 to be right there. Yeah, you might have lost a couple bucks. That's why I say it's okay. You're going to win a few. You're going to lose a few. But if you continue this style of trading with the Outlier Trend Template, with the red light, green light, and with nothing else, I mean, of course, adding in additional data points like outliers, fear and greed, like outliers, buy and sell signals, like the market breadth, all of that will make your win rates higher, or it should make you have a greater edge, is a better way to say it. Have a greater edge in the market by additional data coming through. But if you just wanted to look at the price, because only price pays, you can do tremendous work here. But you have to be okay with taking an occasional loss of $5 so that you can make a $37 win every once in a while. If you're going to take these moves, like imagine you're on the far right-hand side of the chart, you can't see what's happening tomorrow. You just need to know where you're going to get out if you're wrong. And if you're right, you can make bank. And if you're wrong, let's go to this example right here. If you're wrong, well, it's not necessarily that you're wrong. It just is a losing trade. If you're wrong and it goes up and it comes back down, that's okay too. Because you're going to be wrong small and you're going to be right big, but you have to be able to play the game.
It was at about 130. So you made 30% plus 30% in 20 days or something like that. That's very much a win, right? So that was a good call. And then what's happened after this? Well, we've just sort of, that's pretty much what we've done. We haven't really done anything at all. So it's trading at the same levels now at $120 we were trading at in May 2024, right? So the good thing with that is that fundamentally the stock's gotten a lot cheaper because, oh boy, has their revenue and their profits improved over the last year. So you got to ask yourself, though, now, is this the moment to buy it? And what am I seeing? Well, I'm seeing that nice little recovery here, right? But as we recover, as we go higher, have a look at volume again. Right? Is that institutions buying NVIDIA hand over fist, or is that institutions going, I think we'll wait? Why would they wait? Because
where are we at on the chart today? I'm waiting. I'm definitely waiting. Your Outlier Trend Template is pointing straight down. Let's go over to Outlier real quick. NVDA. Let's look at the data behind it right now. Yeah, it does have a buy signal. Could have definitely made some money right here. But here's the thing. Once you see the fear start coming back in, because the fear was evaporating, once you see the fear start coming back in, that's where I would get out. So you could have got out with maybe a small loss, maybe a small win. right here. But looking at it over here, we've still got a ton of fear in both the tech sector and in NVIDIA itself. In fact, it says today's value is at 24.78. Now, not quite as fearful as it was when it peaked at 17, but still, there's a ton of fear in this.
Because they want to see a clear turnaround case for semiconductors. And they probably want to see what Trump's going to say on the 2nd of April. So while I would prefer to buy NVIDIA over AMD, because technically both are not perfect from a chart point of view, NVIDIA is the proven market leader, AMD is the hopium, I would still prefer to wait until we clearly break out above this 50-day moving average line here, that yellow line there, take out the resistance at
Look at that. Felix and I are on the same page here. Your 10, 20, 50 crossing up, right? When price closes over the 50, it might even have that's the crossover happen before it hits there. So Felix and I are in total agreement on that. That's exciting.
130, and until we see some freaking volume coming in here. And also, and again, I haven't looked at this yet, but I'll tell you what it says. Let's have a look at the dark pool for NVIDIA. So I just delete the AMD ticker there that I'd saved, and I write in NVIDIA. So it shows it to you for like all major stocks. And in the last, a couple of hours here, and it'll show you that by the minute if you're like logged in live when the market's actually open. We have pretty much only bearish trades. There is one bullish trade here. Selling puts. Maybe they're taking profits. Maybe it's genuinely bullish, but you got to see where people are voting, right? It's almost all bearish. So what that's saying to me is that the market, and I mean by Wall Street, I mean the big guys, have not shifted yet. They have not changed their tune on this yet. So yes, I think it is an opportunity, but it is about timing.
And you'll know. Isn't that fun? Isn't that awesome to think like he's talking about right here? Right? The market has not shifted its opinion, on this, but you'll know when it does. You will know when it does. And that's so empowering, isn't it? Hey, let me do this. Let me introduce myself real quick. I know. Who is this random guy on the internet? Well, my name is Chris Friul. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I'm choking on myself here. I've been successfully trading since 2009. And this is where outliers like us save time, make money, and start winning with less risk. I got something stuck in my throat for sure. Together as a team. And go ahead and subscribe if you haven't already. So let's look at today's poll. I want to get your opinion. I want you to vote for me real quick. What do you think? Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die of euphoria. What do you think? Pessimism is the best buy signal, or euphoria is when the smart money sells? Oh, so we're changing this up a little bit. We're trying to make it where both of them are actually great answers. So I want your opinion. So go vote over on my YouTube channel. Pessimism is the best buy signal, or euphoria is when smart money sells. Both of those are really good answers, honestly. What do you think? What do you think is more important here? Hey, if you're ready to save time, make money, and start winning with less risk, I would encourage you to go over to outlier.com. You can get the annual pass for just 82 cents a day. And if you are a monthly member and you're ready to upgrade, you can now upgrade with just one click over on outlier.com. Let's go over here. Let's refresh the page and see how y'all voted. I'm curious to see. Then I need to vote. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die of euphoria. What do you think? Pessimism is the best buy signal. Euphoria is when smart money sells. If I were voting here, which I'm going to vote right now, I'm actually going to vote for this one. Euphoria is the smart money sells. Because if you remember the market cycle, which we hadn't talked about in a minute, euphoria is right here at the top, right here at the beginning of stage 3. Let me look at this right here. Euphoria is a great topping point. Is pessimism on here? Not necessarily. But pessimism, in my opinion, you still have people who are like, I got to get out of here. This is bullcrap. And I wouldn't say that that is a buy signal personally. Euphoria is when smart money sells. Look at that, 70-30. Very cool. I really appreciate you taking the time to vote for that. Of course, tell me what you're trading in the chat. And be sure to come back for this afternoon's live stream where outliers like us will save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of them. I also recommend you have a fantastic day. We'll talk soon.